Amongst the wars, financial crashes, technological advances, stock market bubbles, one thing has remained fixed: the ever-constant allure of gold as a monetary insurance policy. In this video, I'll go over the top 5 reasons why gold is the ultimate financial safe haven. Number 1. Longevity. Gold has been used as money for 2,000 years and has stood the test of time. The World Gold Council states that gold coins were first used in 550 BC. Gold has been used as a store of value that is universally recognized by all cultures around the world. It is a store of value that does not perish, unlike agricultural commodities, for example. Fast forward, and by the late 19th century, many of the world's major currencies were fixed to gold at a set price per ounce under the gold standard, and this persisted in different forms for about 100 years. As recently as 1971, the world reserve currency, the US dollar, was actually backed by gold. Number 2. Intrinsic value. Gold will always retain some value. It cannot go to zero, unlike shares, which can lose all their value or even have their trading suspended on the stock market. Gold will always be traded and will have a steady stream of buyers and sellers, both private and commercially. Shares can be risky, as things like stock market turmoil, accountancy fraud, investor sentiment can all rock the perceived value of shares and send them tumbling. Shares can also be diluted by the issuance of more shares. This devalues the original holding. Since gold cannot be created out of thin air, it will always hold the advantage over other investment vehicles. Number 3. Consistent purchasing power. Unlike paper-based money, which loses its purchasing power through inflation and money printing, gold is quite constant in its purchasing power. The red line on this graph shows how constant gold's purchasing power is, going back all the way to 1600, which is a remarkable feat in itself. Moving on to this table, it shows how all the major world currencies since 1971 have lost huge amounts of value versus gold. Number 4. Central bank price suppression. Central banks actively suppress the price of gold, so this leads to the perverse but advantageous situation where gold can be bought at a discount to its true market value. There are not many things that can be bought at a discounted level these days. Most assets like property and shares have been inflated due to huge money printing. To get an idea just how suppressed the price of gold is, if you adjust the gold price for inflation, you would get a figure of around $21,000 an ounce, which is a huge increase over the current market value of gold. Number 5. Consistent performance. One look at this table shows how consistent the returns of gold have been, regardless of the currency in question. If you look at the price of gold in pound sterling since 1973, again you will see a remarkably consistent price performance over the past 40 years. Now, that's not a bad performance for something that is actively suppressed by the Bank of England. Final thoughts. In an age of huge money printing by the world's central banks, government-issued money is being devalued at an alarming rate. Combined with ballooning debt amongst developed countries, the argument for owning gold is stronger than ever. The real kicker is the artificially depressed price. Even though the price has climbed steadily over the last 20 years, the fact that gold is still well below its inflation-adjusted peak of $20,000 per ounce means that there is a huge upside. If we do get the much vaunted financial reset, then buying gold could be one of the smartest investments made today. If you take the total US debt and divide it by the total tonnage of gold held in Fort Knox, it would take a gold price of $70,000 per ounce to balance the books. Now that is some crazy leap. Countries like Russia and China are quietly adding to their gold reserves, as they know the current dollar-based system is most likely on its last legs, and if you're wise, you should do the same too. I do hope you have enjoyed this video and have found some value in watching it. I'll sign off with this quote from Alan Greenspan. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value.